Hi students, welcome to DS Economics. Today we are going to discuss 2016 June Kerala State Economics previous year question. This is your part number 3. In this part we are going to discuss from question number 81 to 120 question. Those who come for the first time subscribe to this channel, and those who do not watch the previous part videos they can watch in the playlist. So let's start today's first question, question number 81. The components of PQLI are means physical quality of life index PQLI are life expectancy, yes. IMR means infant mortality rate, yes. And literacy rate, yes. This is the right answer. The components of PQLI are life expectancy, infant mortality rate and literacy rate. These three are the components of PQLI. Then question number 82. Inducement to investment is limited by the size of the market is advocated by Keynes, Alan Young, Romer, Todaro. This concept was given by Alan Young, option B, because Alan Young argued in favor of increasing return to scale and stated that investment is limited by market size and linking demand and growth. So option B is the right answer. Then question number 83. Population is a positive factor to economic development. This argument is attributed to Malthus, Enoch, Hoover, Simon. This concept related with Julius Simon, option D, because Julius Simon, a neo-population optimist, believed that population growth leads to innovation and human capital formation, thus benefiting the economic development. So option D is the right answer. Then question number 84. Who among the following divided technology gap between rich and poor into two components, a physical object gap and an ideal gap? This concept was given by Paul Romer, Thomas Homer, Marshall, Gunnar Myrdal. This concept was given by Thomas Homer, because Thomas Homer Dixon categorized the technology gap into physical object gap, or like we can say physical object tools or machines, and another one is ideal gap, physical object and ideal gaps means knowledge, innovation, etc. Then question number 85. An economist who summed up 6 factors that led to the growth of advanced industrial economies and termed them as stylized factors. Singer, Calder, Keynes, John Robinson. That is given by Calder. Stylized factor. Nicholas Calder outlined the stylized facts of growth in advanced economies, including constant capital output ratio, steady rate of growth of output and capital, rising productivity, etc. So option B is the right answer. Then question number 86. Which model has suggested that growth is directly related to saving and indirectly to capital output ratio? Ricardo, Lucas Romer, Mead or Harold Domer? This concept was given by Harold Domer model, because growth rate, according to Harold Domer, growth rate or G is equal to S by G is equal to S by V. Here G means growth rate and S means saving rate and V means capital output ratio. So G is equal to S means G is directly related to growth rate, is directly related to saving, and growth rate is indirectly related to capital output ratio. So this concept was given by Harold Domer. Then question number 87. The major difference between Harold Domer and Solow model of growth lies in definition of labor, definition of capital, substitutability between labor and capital, or assumption regarding returns to scale. This concept was the major difference between Harold Domer and Solow model of growth lies in substitutability between labor and capital, option C, because Harold Domer assumes fixed proportion of capital and labor, no substitution. Harold Domer assumes fixed proportion, and Solow allows substitutability between labor and capital using a Cobb-Douglas production function. So substitutability between labor and capital is the right answer. Then question number 88, Mahalanobis model laid great stress on the development of energy heavy industry, agriculture or science and technology. Mahalanobis model laid great stress on the development of heavy industry in second 5-year plan. The Mahalanobis model in second 5-year plan emphasized investment in capital goods and heavy industries to achieve long-term growth. Then question number 89, the concept of technological dualism is associated with Benjamin Higgins. Benjamin Higgins introduced the technological dualism to describe coexistence of modern and traditional technologies in developing economies. Then question number 90, who has done the pioneering work to statistically separate the contribution of technological progress to economic growth? Robert Solow, Midrell, Benjamin Higgins, J.R. Hicks. This concept was given by Robert Solow or Solow model, because Robert Solow introduced growth accounting, separating growth into inputs like labor and capital and residual growth due to technological progress, known as Solow residual. So the pioneering work of statistically separate the contribution of technological progress to economic growth given by Robert Solow. Then question number 91, the theory of low level equilibrium trap is associated with H. Lieberstein, Lenson, H. Mint or Lewis. This concept is associated with Lenson. Richard R. Lenson developed the low level equilibrium trap theory, explaining how low per capita income and low savings prevent self-sustaining growth in developing countries. Then question number 92, theory of growth developed by Schumpeter gives importance to the role of innovation. Yes, Schumpeter given the concept of innovation. So option A is the right answer, because Joseph Schumpeter emphasized innovation as the key driver of economic development introduced by entrepreneurs through creative destruction. So option A is the right answer. Then question number 93, Day's method of valuing an environment is not related to market price. Hedonic price method related to market price, but contingent valuation method is not related to market price. This is correct. Travel cost method is also related to market price. Contingent valuation method, it is a non-market based method that uses survey techniques to determine how much people are willing to pay to preserve an environmental good. So option B is the right answer. Then question number 94, Day's method has frequently been used to value recreational sites. Which method? Travel cost method, marginal cost method or contingent valuation method? This concept is related with travel cost method. Travel cost method has frequently been used to value recreational site. Travel cost method uses the expenses incurred by visitors for travels, time, etc. to estimate the value of recreational sites like parks and lakes. Then question number 95, value of a resource includes option value, bequest value, existence value, all of the above. Yes, all of the above are right answer. Value of a resource include option value as well as bequest as well as existence, because the total economic value includes option value. Option value means value of preserving for future use. Then bequest value means value for future generation, and existence value means value of knowing it exists even if not used. So these all of the above are right answer. Then question number 96, the term option value and its theoretical underpinning as a non-user benefit were initially developed in 1964 by Wallace Nicholas Strain or Whitesborough. It was used by Bruton Wisbord. Option C is the right answer, because Bruton Wisbord introduced the concept of option value in 1964. Because Bruton Wisbord introduced the concept of option value in 1964, defining it as the value placed on preserving a resource for possible future use. Then question number 97. What is a common property regime? What is a common property regime? Individuals held entitlement? No. Government owns and control property? No. No one owns and exercise control over the resource? No. Property is jointly owned and managed by a specific group? Yes. Common property regime means property is jointly owned and managed by a specific group. This is called common property regime, because a common property regime refers to resources that are owned and managed collectively by a defined community or group under mutual agreement or norms. Then question number 98. Which of the following is not a cause of market failure? Not a cause of market failure. Asymmetric information is a cause of market failure. Externalities, monopoly power, these are the causes of market failure, but competitiveness is not a cause of market failure. So option D is the right answer, because competitiveness is a desirable feature for market that leads to efficient outcomes. So market failures are caused by asymmetric information, externalities and monopoly power. Then question number 99. What are command and control regulations? CAC. What are command and control regulation? Government's use of price and quantity mechanism to internalize the external? No. Government placement of a tax directly on population? No. Government implementation of a subsidy? No. CAC means government's use of law and regulation that dictate the standards and or technology used to reduce pollution. Yes, option D is the right answer, because CAC regulation involves setting specific limits or mandating technologies for pollution control such as emission standards. So option D is the right answer. Then question number 100. Which theory or rule claims that environmental regulations, super innovations and new technologies, thus increasing a firm's competitiveness? Coase theorem, the precautionary principle, Hotling's rule or Potter hypothesis? This concept was called Potter hypothesis, because the Potter hypothesis argues that well-designed environmental regulations can stimulate innovation, improve efficiency and enhance competitiveness. So option D is the right answer. Then 101. Some assets which are very much liquid though not as much as money itself is called near money, dear money, substitute money, fiat money. This is called as near money. Near money includes highly liquid assets like saving accounts, treasury bills or short-term bonds, easily convertible into cash but not actual currency. This is near money. Then question number 102. Average number of money transfer among spenders during a given period of time is called marginal acceleration money, average acceleration of money, marginal velocity, transaction velocity of money. This is called as transaction velocity of money, because the velocity of money refers to how often money changes hands in a given period. So the transaction velocity specifically relates to actual spending activity. Then question number 103. The law of Dash says cheap money drives out dear money. This is J.S. Mill, Graham, Sayers or Keynes. This is called as Grayson's law. Grayson's law, bad money drives out good money out of the circulation. When both circulate, people hoard good money, or good means valuable money, and spend the cheaper one, like in the gold coin or gold or silver coin. Then question number 104. Secondary deposit refers to term deposit, recurring deposit, deposit created through lending or fixed deposit. Secondary deposit refers to fixed deposit, because secondary deposit are credit created deposits when banks lend money, it is redeposited into other accounts, thus creating more money in the systems. So option D is the right answer. Then question number 105, list 1 and list 2, restatement of quantity theory of money, inventory theory of money. First one is restatement of the quantity theory. Restated the quantity theory by Milton Friedman. Yes, restatement of quantity theory of money given by Milton Friedman, and quantity theory of money given by Irving Fisher. Then inventory theory of money given by J.S. Bowman. Milton Friedman restated the quantity theory in monetary term, and Irving Fisher gave the quantity theory money equation MV is equal to PT, and J.S. Bowman developed the inventory or demand for money theory, explaining how people decide cash holding. So 1, 2, 3 is the right answer. Option A is the right answer. Then question number 106, which among the following are commercial banks? RBI, SBI, NABARD, LIC. Commercial banks are RBI is a central bank, NABARD and LIC, they are not commercial banks. Only SBI is the commercial bank. State Bank of India is the commercial bank. So option B is the right answer, because SBI is a commercial bank and RBI central bank, NABARD is a developmental bank, and LIC is a life insurance, means insurance company. So only SBI is the commercial banks. Then question number 107, according to which principle the tax system should be able to yield enough revenue for the treasury and the government should not be forced to restore the deficit financing? Canon of certainty, canon of productivity, canon of convenience. This is a canon of productivity, because the canon of productivity or canon of adequacy says that taxation should generate sufficient revenue to meet government expenditure. So option B is the right answer. Then question number 108, a tax is said to be regressive when its burden falls on more heavily on the poor than the rich. Yes, more heavily on the poor than the rich. This is called as regressive, means rich people give less tax and poor people give more tax. This is regressive in nature, because in regressive taxation lower income individuals pay a higher portion of their income in taxes compared to the higher income groups. Then question number 109, tax force was set up under the chairmanship of Dr. 𝙁𝙍𝙀𝙀 in 2002 to liberate the foreign trade sector in India, abolish the Gift Tax Act, recommend measure for the simplification and rationalization of direct and indirect taxes. Yes, this is the answer. Recommend measure for the simplification and rationalization of direct and indirect taxes. So 109 right answer is option number C, because the 𝙁𝙍𝙀 committee aimed to make the Indian tax system simple, more efficient and equitable. So option C is the right answer. Then question number 110, a tax will be fully borne by the buyers if the demand elasticity is 1, 0, infinite or less than 0. Demand elasticity is 0. Option B, because if demand is perfectly inelastic, means when demand is perfectly inelastic or 0, then consumers will bear the entire burden of the tax. Since quantity demanded doesn't change with price. So tax will fully borne by the buyer if the demand for elasticity is 0 or inelastic, like in necessary goods or like medicine or salt, etc. Then question number 111, what is the correct sequence of the following? Makhara Declaration, Symmetry Agreement and Keynes Plan. First one is Keynes Plan. Keynes Plan is early 1940s Bretton Woods Conference. So this is one. Then Smithsonian Agreement in 1971. This is 1940s, 1971. Then Marrakesh Declaration in 1994. Establishment of WTO. So 3, 2, 1 is the right answer. Option number C. Then question number 112. Dash is the theoretical possibility that the imposition of a tariff on imports may reduce the relative internal price of the good. That is Leontief paradox, Maslow's paradox, or Smith paradox. This is called as Maslow's paradox, because the Maslow's paradox suggests that under certain conditions, imposing a tariff may lead to a decrease in the domestic price of the imported goods due to a terms of trade effect. Then question number 113. Which among the following is not an assumption of 𝙁𝙍𝙀𝙀 theory? Not an assumption. First one is, it is a two country, two commodity, two factor model. Yes, 𝙁𝙍𝙀𝙀 theory is a 2 into 2 into 2 model, means two country, two commodity, two factors. Then constant return to scale prevail. Yes, this is also true. First, second true. Then there is incomplete specialization. Yes, this is also true. Then fourth one, different technology in the production of same commodity in both the country. No, same technology, not different technology. So option D is not an assumption, because full specialization in long run is not required. So different technology is not an assumption here. So option D is the right answer. Then question number 114. Stoffler-Samuelson theorem states that when a country imposes tariff on its import good, then abundant factor reward will increase. No, scare factor reward will increase. Yes, this is the answer. Scare factor reward will increase and domestic income distribution becomes in favor of the scare factor. Option B, because Stoffler-Samuelson theorem, a tariff on import raises the return, means real income, of the scare factor and lowers that of the abundant factor. So it shows how trade protection affects income distribution within a country. So option B is the right answer. Then question number 115. QM by QX, or quantity of imports into a country divided by quantity of exports, is terms as. This is income terms of trade. No, net butter terms of trade, real cost terms of trade, or gross butter terms of trade. This is called as gross butter terms of trade. Gross butter terms of trade, it is quantity of export by quantity of import. So it measures physical exchange ratio of goods. So option D is the right answer. Then question number 116. Which among the following are examples of economic integration? Free trade area, custom union, common market. These all are related with economic integration. Free trade, custom union, common market, but cartel is not here. So 1, 2, 3 in the option number D. So D is the right answer, because economic integration involves reducing trade barriers among member countries, and free trade area means no tariff among members, like NAFTA, NAFTA. Then custom union means free trade plus common external tariff, and common market means custom union plus free movement of capital and labor. But a cartel like OPEC, oil and petroleum exporting country, cartel is a price fixing or output limiting agreement, not economic integration. So option IV is not related here. So option D is the right answer. Then question number 117. If the reward rate is below the present spot rate, the foreign currency is said to be at a dash with respect to domestic currency. The foreign currency is said to be at a spot discount, forward premium, spot premium, or forward discount. The right answer is forward discount, because if forward discount less than spot rate, then the foreign currency is trading at a forward discount. So it implies depreciation of the foreign currency in the forward market. So option D is the right answer. Then question number 118. Each member of IMF is assigned to a quota expressed in special drawing right. Yes, this is the right answer, because IMF quotas are expressed in special drawing rights, which is an international reserve asset. So special drawing rights value is based on a basket of major currencies like US dollar, European Union. So the special drawing rights is an international reserve asset created by the International Monetary Fund, and its value is based on the US dollar, then European Euro, EUR, then CNY means Chinese yuan, then JPY means Japanese yen, then GBP means British pound sterling. So these are the, each currency is the special drawing right basket, has a specific weight, and the IMF reviews the composition and weightage in every 5 years. Then question number 119, match list 1 associate of the World Bank and list 2 their establishment year. Asian Development Bank. Asian Development Bank was established in 1966. Then IDA, International Development Association, it is a part of World Bank and was established in 1960. And International Finance Corporation IFC is also a World Bank constitute, founded in 1956. So first one is Asian Development Bank, was established in 1966. Though not a part of the World Bank Group, is often considered an association in broader development discount. The World Trade Organization was established in 1995 and replaced the General Agreement on. So 213 in the option number A. So here A is the right answer. Then question number 120, the World Trade Organization overtook the function of IMF, IFC, IBRD, GATT. World Trade Organization overtook the function of GATT, GATT. World Trade Organization was established in 1995 and replaced the GATT, means General Agreement on Trade and Tariff, and it took over and expanded GATT's function to include services and intellectual property rights with a stronger dispute resolution mechanism. So option D is the right answer. This is all about for the today's session. I hope you enjoyed this video. Please like the video and share with your friends, and also comment in the comment section. And those who come for the first time, subscribe to this channel, and those who do not watch the previous part videos, they can watch in the playlist. So thank you all for watching. Jai Jagannath.